Hello everyone. Let me ask you a simple question. Do only rich people file income tax returns? If your income is below the taxable limit, should you still file an ITR? Can filling an ITR help you get a home loan? Can it help you get a visa? Can it even help stock market investors save tax in the future? Most people hear the word ITR, but they don't know why it is important. In today's video, I will explain everything in very simple language. By end of this video, you will know exactly what an ITR is, who should file it, and why it's important, and the benefits of filing it. So let's begin. So, what is ITR? ITR stands for Income Tax Return. It is a form that you submit to the Income Tax Department. In this form, you will tell the government how much money you earned during the year, how much tax was paid, whether you need to pay more tax or receive a refund. Think of it like your a yearly income report. Just like students get a report card every year, an ITR is a report of your income for the financial year. And now, income tax versus ITR. Many beginners think income tax and ITR are the same, but they are different. Income tax is the tax you pay to the government if it is applicable. ITR. So, ITR is a simply report of your income. Let's understand with an example. Suppose your annual income is below than the taxable limit, you may not have to pay any tax, but you can still file an ITR. So remember this simple sentence: paying income tax and filing ITR are two different things. Why is ITR important? Now let's understand why millions of people file ITR every year. So first, proof of income. ITR is one of the strongest proofs of your income. Second, home loan. When you apply for a home loan, banks often ask your ITR. Third, car loan. Many banks also ask for your ITR before approving a car loan. Fourth, personal loan. Freelancers and business owners usually don't have salary slips, so bank often use their ITR as a proof of income. Fifth, visa. So many countries ask for ITR while processing visa applications. Sixth, tax refund. Sometimes extra tax is deducted from your salary or other income. By filing your ITR, you can claim a refund if you are eligible. Seventh, financial record. Filing ITR every year creates a proper financial history. This helps in future financial transactions. Eighth, carry forward of losses. This point is especially important for stock market investors. Suppose this year you invested in shares. Instead of making a profit, you occurred a loss of 1 lakh rupees. Many people think my money is gone forever, but that's not always true. If you file your ITR on time, you may be able to carry forward eligible losses to the future years under the income tax rule. Now suppose next year you earn a profit of 1,50,000. So only you have to pay 50,000 tax only. So you may be able to adjust the earlier eligible loss against the future profit. So as a result, tax may be calculated only the remaining eligible profit, as I said. So subject to the applicable rules. That's why filing your ITR on time is important, especially if you invest in stock market or run a business. And who should file ITR? Now let's see who generally files as an income tax return. Some common people are salaried employees, business owners, shop owners, freelancers, doctors, engineers, chartered accountants, consultants, people earning rental income, people earning interest from deposits, people earning capital gains from shares or mutual funds, etc. Even if you don't have to pay any income tax, filing an ITR can still be useful because it creates an official financial record. And now, financial year and assessment year. Before filing an ITR, you must know two important terms. Financial year. A financial year is a period in which you earn your income. In India, it's a start on April 1 and ends on 31st March. For example, you earn income between April 1 2025 and 31st March 2026. That is called financial year 2025-2026. Now comes another question. If I earned money in 2025-2026, when do I file the ITR? That's where the assessment year comes in. Assessment year is the year in which you file the ITR for the previous year financial year. And example, income earned in 2025-2026 is generally filed and assessed in assessment year 2026-2027. So this is why you always hear both financial year and assessment year. So remember this simple trick: FY equal to income earned, AY equal to assessment year equal to return filed. So different types of ITR forms. Many beginners ask, which ITR form should I file? So don't worry, you don't have to remember every form. The four most common forms are ITR 1, SARJ, generally used by many salaried individuals with a simple income subject to eligibility conditions. ITR 2, generally used by individuals who have capital gains or are not eligible for ITR 1. ITR 3, generally used by people having income from business or profession. And ITR 4, Sugum, generally used by eligible taxpayers, optioning for the presumptive taxation scheme. If you don't know which form applies to you, so don't guess, always check the income tax department website or consult a chartered accountant. And now main question, what happens if you don't file ITR? Many people think I will skip filing this year. But if you are required to file an ITR, it can have any consequences happen. For example, you may to pay a late filling files. If tax is applicable payable, interest may also apply. If you are eligible for a refund, it may be delayed until you file. If you apply for a home loan or visa, not having recent ITRs may also create difficulties. And remember, the point we discussed earlier. If you are eligible to carry forward certain losses, missing the filing deadline may mean you lost that benefit. So file the ITR so you get carry forward losses, that a benefit you get it. And if you are required to file, it's always better to file an on time. So and now common mistakes. Let's look at common mistakes people make: choosing the wrong ITR form, entering a wrong PAN number, giving incorrect bank details, forgetting to report all incomes, missing the filing deadline, filing the return but forgetting to e-verify it. So before clicking submit, always check every detail carefully. A small mistake today can create problems later. So on final summary, let's quickly revise today's video. And ITR stands for income tax return. Filing an ITR is different from paying income tax. ITR acts as a proof of your income. It helps while applying for home loans, car loans, personal loans, credit cards and visas. If extra tax has been detected, filing an ITR helps you claim an eligible tax refund. Investors and business owners may be able to carry forward eligible losses by filing their ITR on time, subject to income tax rules. So always remember the difference between financial year and assessment year and choose the correct ITR form. If you are required to file, so don't miss the due date. So I think July 31st is the last date, so you can file the ITR. And that's all for today's video. I hope you now understand income tax return in a very simple way. If you found this video helpful, so please like, share and subscribe to Keshwa Money Talks. Thank you for watching. I will see you in the next video with another simple finance topic. So Jai Hind.